GM, hello, good afternoon, good evening, depending on where you are in the world. This is a Stable Stories Spaces. My name is Bored. I go by Bored Elon Musk sometimes as well. Been doing these spaces with the Stable team for the last few months now. We took a little bit of a break, but we're back. And every episode, we try to dive into a particular topic related to stablecoins and the industry around it. Personally, I believe every single piece of money and asset is going to go on chain. Stable coins are going to play a very important role in that. And so that was part of the reason that I wanted to sync up with the Stable team and work with them in the early days. And they've managed to bring some really great guests to these recurring episodes. We record these live here on X Spaces. And of course, we share them as recordings for people in the future. So we've got a special guest today, Simon from Zarp, and we'll talk to him very soon about what they're working on. Typically, the way these shows go is we talk a little bit about what's going on in the industry, some recent news, and then we kind of dive into the focus topic for the show. But perhaps before we jump into news, let's check in with everybody. Seb, how are you doing today?
Good, thanks. It's been a while, but I'm glad to be back.
Yeah, it's been a little bit, but good hearing your voice. And Simon Dingle from the Zarp stablecoin, he's a core contributor. Good to connect with you. Would love to hear maybe a little bit about you, and for anyone who hasn't heard about what you're working on, perhaps you could provide a brief intro.
Yeah, great. Thanks, Board. My name's Simon. Been in crypto since about 2011. Worked with a bunch of teams building out exchanges, portfolio management apps, whole bunch of stuff, doing a lot of writing and speaking. Got a couple of books out on crypto. And then about 8 years ago, started my own company to explore some opportunities that I felt strongly about. And the most recent one is Zarp, which is a stablecoin for the South African Rand, reserve backed, treasury managed by Old Mutual, which is the oldest asset management on the manager on the continent. And yeah, we're a crypto native stable for an African currency and having a lot of fun with it.
If you manage to get the oldest of anything to buy into something that's new, you've basically done the hardest part, right? So everyone else should be easy.
Yeah, yeah.
That's my theory, at least. Well, cool. So I wanted to kind of go through just some recent large headlines, and then would love for you guys to just chime in and provide perspective. If you have any thoughts, additions, reactions to them. So Africa specific, the Kenya Parliament passes a bill recently to regulate digital assets. So good sign. Central authorities, getting much more involved in stablecoin issuance. That's obviously quite important for something like a stablecoin. Um, on the global scale, MetaMask is going to be launching their own USD stablecoin. So competition for stablecoins heating up. MetaMask, arguably still the biggest player in town in terms of wallets. That's quickly eroding, but nonetheless, that is a major step forward. In terms of Stripe, they've been extremely active for obvious reasons in the space. I think it was yesterday, added stablecoin support for recurring subscriptions. So that's pretty massive if you're, running commerce online and you want to receive stablecoins for a subscription instead of, say, people paying with a credit card or a debit card. That's now possible. Also related to Stripe, Bridge, which is owned by Stripe, filed for a national bank charter. So that pretty big sort of ripple effects of that as well, to allow custody and stablecoin issuance. And then last Friday, we this is sort of a news but bad news. We all saw and hopefully didn't feel the impact of the largest crypto liquidation in history, and for the most part, that was stablecoin, related. And actually, maybe that's a topic that is kind of a hot topic worth discussing. Seb, I mean, do you kind of agree with that? Like a lot of people were pointing towards stablecoins as a root of the issue, or I guess highly involved in the problem. But what was your take on what happened last Friday?
I mean, I think my take from the stablecoins perspective is we could have just as easily seen a large stablecoin have like solvency and liquidity issues, but I mean, there were some issues with Athena USDE. I think that was mostly just like a kind of momentary depegging caused by some API issues on Binance. But I think for the most part, it was impressive to see that most stablecoins stood up. There wasn't huge rushes to get out of particular stablecoins. And yeah, it was really just the cascading like derivatives and liquidations that caused the big sell-off.
Yeah, Simon, how did you fare on Friday, and any kind of reactions to both the situation and maybe how the recovery took place?
Yeah, I mean, we were fine. We're pretty small compared to the big cap USD coin, so we're just a scratch under $5 million. So like it didn't even blip on our radar really. You know, the ARB bots did their thing. It got balanced out, so no major hits for us. But yeah, I agree with everything Seb said. I guess this was, you know, another test for the industry, and like every test just shows more resilience and more maturity for the space, I guess.
Yeah, I agree, and you know, it's not an exact analogy, but I do think back to kind of historical periods and bank runs and people waiting in line to take their money, and that's a bad scene. That's actually a much worse and probably dangerous situation than what we have in crypto. People can move money very fast. Things can drop very fast, but they can recover very quickly as well, and not a lot of sort of government intervention needed. So I saw that as a test that was very positive, and we passed.
Yeah. And I mean, if you think back to like SVB going down and what that meant for USDC, you know, when UST completely crashed, this was a very different situation. You know, way less serious for the space.
Yeah, yeah, agreed. And I think to some degree, perhaps it just felt worse because we had been on a 3 to 5 month streak of kind of up only, and so you know something went down and everyone got scared. But hey, it's Wednesday of the next week. You know, 3 business days went by and everything's fine. Seb, go ahead. I think you were
Yeah.
answering.
Oh yeah, I was just gonna again highlight that launch of stablecoin support for recurring subscriptions. Not just for Stripe. I'm sure many of the major payment service providers will offer this soon if they don't already. But I think that is a big, if not just a big use case, but a big like growth driver for stablecoin, particularly for cross-border payments. Like buying a physical product, obviously from overseas, obviously stablecoins can help reduce the cost there somewhat, but you still have to ship the product to another country, which is very expensive. But subscriptions like, I don't know, a blog or Netflix, or, I mean, in particular, these new AI subscriptions like ChatGPT or Cursor, that's going to be a huge growth driver for like access to audiences in other countries where traditionally that's been a huge cost for these companies trying to receive payments from another country. So it's something I can only see local stablecoins like Zarp being a big part of as well.
Yeah, absolutely. And you know, if I'm a service provider, you know, noted on the fact that we can't change physics, we can't change how hard it is to ship things or how expensive it is to send things around the world. But in terms of inbound, in terms of the currency that's being used to pay people, especially in an online world where a lot of services are digital and not physical, this is a big unlock, and a lot of people who perhaps were blocked off, from being able to buy certain services because of their strict kind of financial controls in their country, their region. That should become much easier. So net positive there. Simon, I think you're
Yeah.
unmuted. Oh, sorry. Go ahead.
Oh, sorry. I was
Yeah.
just going to
I
say
mean,
it's
mhm.
I have no doubt that Stripe will be going to their like major merchants and saying, "Hey, you can either pay us like 5% or 3% for each transaction from a foreign country or a foreign currency, or we've got this stablecoins product that you pay, I don't know, 0.5%. I forgot what the exact fee is. So yeah, I think it will be big for like particularly these AI companies. I think they will reach a whole new maybe crypto native audience, but even just non-crypto native who haven't had access to these services in the past from other countries.
Yeah. I mean, there are other challenges. For example, in my home country of South Africa, Stripe isn't available yet. So you know, as a merchant, you can't sign up for a Stripe account and receive payments yet, but you can receive crypto without Stripe. I mean, I guess that's what I find kind of interesting about this moment in time is, you know, we've got crypto, which was designed to be peer-to-peer electronic cash, right? It was designed to disintermediate all of these payment systems. If I want to accept Bitcoin or a stable coin or, you know, any crypto on my website, I really don't need the help of Stripe or a payment provider. It's just that we're in a paradigm where people are used to making use of these services and they're so entrenched.
Yeah.
So I think you know, there's an even greater leap we could take to go, well, you know, we don't even need all of that spaghetti in the middle. Let's just accept crypto native payments. But obviously, you've got things like subscriptions that are a challenge. We actually devved a protocol some years ago called Clockwork that kind of solved for subscription payments on chain. It wasn't perfect because you had to kind of fund a wallet that the subscriptions would be reduced from. So not a great experience. We scrapped that project, so it's not live anymore. Um, but I also think it's interesting to think about how stablecoins and crypto challenge the subscription model. I
Yeah.
kind of like the idea of having to manually pay for something every month and think about whether or not I still want it instead of just setting it and forgetting it. I think I speak for everybody who's listening when I say that I've got like God knows how many subscriptions that just come off every month, and I'm like, am I still using this thing? It's like, you know, some DJ software I signed up for 8 years ago. I'm just paying every month. So I kind of like the idea of us getting back to manually having to go, yeah, I still want this thing and pay for it.
Yeah, that's a good point. At least still having to like sign the transaction every month when it pops up.
Yeah, exactly. But I dream of the future where, like, instead of integrating crypto into existing payment rails, we just circumvent them completely.
Yeah, I mean, it's kind of like I always use the analogy of email. A lot of people like the convenience of using, you know, Gmail, Yahoo, whatever it is, but you don't have to, right? You can email whoever you want through your own server, and that will work just fine. But money hasn't quite caught up with that. And generally speaking, people just, you know, tend to move towards convenience. Like that is the majority, but that's okay. Like this is a nice bridge between convenience and the end state we're looking for.
But I mean,
Yeah.
Simon's point does say why, I guess, particularly over the last year, these big companies like Visa and commercial banks and Stripe have like got their act together in terms of stable coins because they can see it's going to happen like with or without them. So they're trying to like force their place in the system so they're not left away from it.
Yeah. And, you know, in the case of Visa and MasterCard, you've got a duopoly that's got a stranglehold on the point of sale systems of the globe, right?
Yeah.
Um, and they, you know, I've been part of a startup where we did card issuing and built some cool stuff on card rails. And I'm not, you know, I'm not dissing card payments. They're super convenient and they work. But the duopoly does have pretty restrictive policies. And so when you speak to big retail groups and merchants and stuff, they're so scared of getting, you know, offending the duopoly and getting kicked off of those rails that they're pretty circumspect about any way that they integrate other payment solutions. And then you've got like the ubiquity of like, you know, Apple Pay and Android Pay and everybody using their phones and watches just to, you know, tap and pay. It's super convenient. The world doesn't perceive that it has a payment problem. And until you get crypto integrated into those systems, that's going to be a really difficult behavior to break. So I guess until then, we're integrating crypto into those payment rails like it's the 20th century or something.
Yeah, well, if nothing else, I think the reduction of fees and money that flows to middlemen versus kind of the end users and the end clients is a good thing. And I also think that this does push us towards a world where there's less um, centralized control of money. You know, I think a lot of people have stories of PayPal or Venmo or other digital payment services freezing their accounts, not allowing them to, you know, to process payments. This isn't a complete solve for that, but again, I do think it moves us in a better direction of permissionless money. So as most technology is, it's all kind of incremental and takes time to get to the perfect world that Simon, you and I envision maybe in 20 years.
I think it's going to accelerate though, because retailers are waking up to what it means for their bottom line. I mean, if you're a gigantic retailer saving on card fees for every transaction that's made in stablecoins, depending on what your fee agreements are and what arrangements you have in between, but that can be like, call it 2% directly to the bottom line. So I think when we got going with this whole experiment with being crypto, I think everybody thought it was going to be pushed by users, and the adoption would come from that end. But we're increasingly seeing the other end of the payment process pushing forward too, because that's where the savings are going to be realized.
Yeah, I mean, I remember 10 years ago running a startup and our margins were about 5% and the payment fees were 3% of that 5, so that's pretty significant, like literally just double profits through that fix. But do you think that basically then that means that companies like Visa, MasterCard, et cetera, are going to have to capitulate and just accept lower revenue because that money is going to flow away from them?
Yeah, I don't know. I'm not sure what it means for them, but I mean, no, there's no such thing as a good analogy, right? But some of them are useful. And something I think about often is I used to do a lot of work in open source software a long time ago, giving away my age. But back then, like Linux was making inroads, Ubuntu was just about to launch, and Microsoft was like really scared about the growth of Linux on the desktop for one, and on server systems, etc. And so they ran like a multi-$100 million advertising campaign. Internally in Microsoft, it was called Get the Facts. And they just spread FUD about how bad open source software is, basically, and why you shouldn't use Linux because it's a terrible idea. Stop me if this sounds familiar. Um, Skip forward, and eventually Microsoft had to realize that this wasn't going away and they need to incorporate it into what they're doing. So like now you have the Windows subsystem for Linux. You can literally run Linux in Windows, which would have been unthinkable back then. So they kind of adapted and stayed relevant. There were a lot of proprietary software companies that didn't, and they just don't exist anymore. And I think that's kind of what we're seeing with TradFi right now. Is they see the writing on the wall. They did do some kicking and screaming years ago, like American Express, for example, ran ads on Twitter promoting a story about how Bitcoin wastes electricity, etc. I think we're now in the adapt or die stage where even Visa and Mastercard realize that they need to play this game and see what it means for their business and how they evolve. Otherwise, they're going to fall into irrelevancy. And so I don't know what that means for them in the future, but it's really promising to see that they're accepting stablecoin for settlement for one, and starting to move into this space and see how they maintain relevance.
Well, if they evolve and catch up, good for them. And if they don't, I'm not going to cry too hard about it. So,
Yeah, good for us.
well, maybe that's a segue into the topic of the hour, and specifically talking about stable coins in Africa. So, in terms of just kind of where things are at, a recent report by Yellow Card, there were a couple of stats that I think are worth noting. First of all, USD stablecoins make up 43% of all recorded on-chain transactions in Africa. So that was as of 2024. Nigeria alone processed 22 billion worth of stablecoin transactions that year. South Africa has 6 million stablecoin holders. I'm gonna have to Google how many people live in South Africa while we're talking.
60 million.
60. Okay, so that's pretty significant. Wow.
Yeah.
So I guess question to you, what's your perspective on why USD stablecoins have seen such a kind of high or early growth in Africa?
Yeah. So I think the first thing I'll say is you kind of have to separate out USD stablecoins from non-USD stablecoins, just because the dollar is idiosyncratic. It's singular in that it's the world's reserve currency. So nothing you do with the dollar is going to behave the way that other currencies do. So that's one thought. But to answer your question, it's a combination of things. In my country of South Africa, we've got pretty strict foreign exchange control. It's this inane, like old apartheid era regulation that for some reason we still enforce. And there are a lot of countries, like us in the developing world, and so USD stablecoins were a neat way to get around foreign exchange controls. I'm not recommending that anybody do that. I'm not commenting on whether or not it was a good thing, but I think that was a lot of the adoption. And then you just had an insatiable appetite for dollars, which has always been there outside of the US, right? So I was traveling in Turkey a few years ago during their hyperinflation, and there was just a flight to USDT because there was no easy way for people to get hold of dollars, and they didn't want to hold their local currency. So it was just a no-brainer, and it spread like wildfire. We saw something similar happening in Nigeria. So it's escaping inflation, it's hedging out of your local currency, it's getting around foreign exchange control. And then once that adoption kind of flywheel is started, then you start realizing that this is really good for payments. It's a better way to accept payments in your business, etc. But from our perspective, we are like, okay, that's good for USD coins. But if we buy into the crypto narrative and we believe that A, crypto isn't going anywhere, it's a proven technology. B, we're re-railing the world's financial system using this force multiplier, and everything is going to move on chain in time. And C, fiat currencies aren't going away anytime soon. Then it's just obvious that you're going to have stable coins for every currency in the world, right? If we presume that business continues the way it does globally for the next, I don't know how many decades, then if we're going to bring all real world assets on chain, we need corresponding liquidity in their home currencies. So it's just like obvious to us that you're going to have a currency for every or stable coin for every currency in the world.
Yeah, I would agree with that perspective, and I've kind of observed, over the last 5 years, this interesting phenomenon of stablecoins are becoming easier and easier to issue from a technology standpoint. The biggest challenges are really from kind of a legal, regulatory standpoint. And what I assumed would happen years ago was that we would see more stablecoins backed by other currencies, non-USD currencies. But at the moment, based on what you're observing and sort of just like psychological kind of confidence in money, is USD is still pretty entrenched, and it doesn't feel like that's necessarily changing, or at least looking at Africa, it's still seen as kind of a stable place to keep your money.
Yeah, absolutely. I mean, it's again the dollar's the world's reserve currency. The world came together at Bretton Woods, everybody that mattered at that stage, and agreed that this would be the world's reserve currency. So that status doesn't change unless the whole world agrees to it changing. There's no way that we're going to see like the renminbi become the world's reserve currency and displace the dollar. That's not going to happen. So assuming that the dollar remains relevant, like dollar stable coins remain relevant, and that's going to be the status quo for the foreseeable future. But there's so much space for other currencies, and there's some interesting experiments. Like there's some projects trying to do a BRICS coin for the BRICS economic kind of notion, and I don't think it'll work because currency baskets never do. But I do think we're going to see a lot of unexpected economic activity that stablecoins are going to enable that just wasn't possible before. And that's kind of the narrative right now, right? Like stablecoins are the hot thing everybody's talking about. If you don't have a stablecoin, you're looking at how you can issue your own. If you do have a stablecoin, you're building your own rails like Circle with Arc or Tether with Plasma. Like that's just what's happening right now. Is the experiment is on steroids.
Yeah, I mean, it definitely feels like every week someone is issuing a new stable coin. I'm launching mine tomorrow. No, just kidding. But yeah, it's definitely we are having the opportunity for real competition, which I see as a good thing. People can compete. These companies can compete. On fees, on tech, on speed, whatever it might be, and ultimately, the idea is that consumers win, people who spend money win. So maybe kind of a little bit of a segue then to Zarp. How are you guys trying to solve some of the problems that still exist? Specifically in South Africa, and what are you? We talked a little bit about the kind of the strength of USD, but if you look at things like the rand, like what are the use cases that you feel are important with local currencies. You talked a little bit about it, but maybe you can expand further.
Yeah, absolutely. So from our perspective, it's like anything you can do with money, you can do better with stable coins, right? It's always going to be faster, cheaper, more efficient. It's always going to disintermediate. So it really has a role to play throughout the capital formation stack. Right now, as is always true with any new technology, it's adopted by its most affluent users in the beginning. So it's like on-chain FX trading, um, you know. Uh, crypto natives hedging out of positions, all of that kind of thing. But I guess what's interesting though is you're starting to open up new possibilities for like digital participation that weren't there before. So, like in my country of South Africa, depending who you ask, there are about 8 million unbanked individuals. These are people living in the informal economy. It's not that they don't want a bank account necessarily. It's just that A, the banks don't really want them as customers because they don't know how to make money from them. And B, they can't onboard them. These are like migrant workers. It's really difficult for them to provide a proof of address, for example. And so, these people exist predominantly using cash, which is, it's a great instrument, but it's a physical item that is, it can get stolen, it can get burned. There's a whole lot of bad stuff that can happen to cash. And now, for the first time with stablecoins, they can participate in a digital economy that doesn't treat them differently because they don't have a big balance. Like the blockchain doesn't care how much money you have. You can open up a wallet, you don't need a KYC, and you can start accepting small amounts. And nobody's going to give you any grief because you aren't meeting minimum balances, etc. So that's really exciting from a financial inclusion perspective and like a digital participation perspective. And I think we're going to see a lot of activity that doesn't just take what we were doing before and make it better, cheaper, faster, but actually introduces new users, new participants, and new use cases that we didn't think of before.
So, in other words, hopefully the cash in someone's pocket is being turned into information on their phone, right? Even if people don't have banks, they have phones and they are able to access digital currency with the same ease as cash, and then hopefully some of those things that you mentioned, like theft, destruction, loss, whatever it might be, cannot happen as easily. So, net positive for society. So inclusion is good. Growth and people managing their money is good. What are some of the, I guess, the downsides or the obstacles that are seen? And Seb, feel free to to chime in as well. But curious, kind of like maybe as a founder or as a core contributor, what in South Africa specifically are sort of the biggest friction points that still need to be resolved?
Yeah, I guess we have the same problem that crypto has in general, in that we need better user experiences. Although I do feel like there was a problem 5 years ago, and it's gotten a lot better today. I think the crypto industry has delivered on better user experiences. There's still some things that make crypto a high barrier for people. So, for example, having to pay gas fees in a native on-chain currency is a big challenge for a lot of people. Like, they want USDT or they want Zarp. They want to be able to accept and pay with stable coins. That's all good and well. But then when you tell them that they have to, pay their gas fees in ETH or in Solana, they're like, okay, well, how do I get hold of that? My friend's got a stable coin and he wants to send it to me, but I don't have Ethereum to send it to somebody else or make a payment. So I think gas is a bigger barrier than we realize for people who aren't crypto native. That's a big challenge. We're getting closer to solving it with things like account abstraction and being able to subsidize gas and things like that. But we really need better solutions to that problem, I think. And that just speaks to the general kind of user experience challenge that crypto has when it introduces itself to normies that crypto natives don't really think about. Gas is kind of something that if you've been in crypto for a few years, you're just kind of used to and it's easy to deal with. But for somebody who's new to crypto, it's a pretty big challenge. And then it's just like building better narratives. It's never the technology that wins; it's always the story that it tells. And I think crypto could be telling better stories about, real world use, about how it democratizes things, how it doesn't discriminate. For example, if you're in TradFi, and you're looking to save your money and get a decent return on it, there's a discrimination that happens there. Like, you need really big minimum balances. You need to be able to open like a money market account or buy T-bills or something like that to get yield. Whereas in crypto, it's pretty easy to democratize yield and give, the maximum available to any participant in a protocol. And it doesn't really matter how much they're depositing into that protocol; they'll still get the maximum yield that that protocol can provide. So telling that story, making people more aware about, how they can maximize their money in crypto, how they can control it without being beholden to a financial institution that could cut them off at any time, and educating regulators and other stakeholders about how the kind of risks that existed in TradFi, obviously crypto has its own risks and some of the same risks, but a lot of the things that you were obsessing over around KYCing people, especially in the informal economy, those risks just don't exist in crypto. It's okay to onboard somebody who's downloaded a wallet app with no KYC. If all they want to do is send and receive crypto, like, that's cool. And so, building that narrative and explaining it better to people who haven't been stuck in the trenches with this technology for the last 15 years, I think is our core challenge right now.
Seb, I know we were talking about sort of the local, but also kind of global obstacles and challenges. I mean, thinking about Stabull in particular, you're head of product. Like, what, as of today, what would you say are the kind of the biggest friction points? Like, would you agree it's generally onboarding, education, or what do you want to solve tomorrow if you can snap your fingers to onboard more people to Stabull?
Yeah, I agree. It's a large part like a UX problem for onboarding new users. And a lot of that is being slowly or quickly in some places solved, particularly with the like sponsor and gas. I think the like access to bank accounts is a good point, and we've definitely seen a lot of Web3 companies start promoting the idea of like a what is it called? US dollar bank account, kind of like a digital bank account, where it's really a wallet behind the scenes, but the UI is presenting it as a bank account. So I think that can be kind of attractive to people that are used to a traditional bank account, but really it's just well, hopefully it's their wallet and it's Zarp or USDT being held in the background. I guess also related to Stabull is I believe a lot of well, I think I saw a report that intra-African trade, like trade between African countries, is around 200 billion, and it's almost greater than trade with the rest of the world. But the majority of that is like cleared outside of Africa through global banks, and particularly it goes through an anchor currency like USD. Well, not like USD, definitely USD. So I think that is like another advantage, I guess, particularly in the context of a DEX or any exchange where you can trade directly between like more local pairs, like Zarp to Nigerian Naira stablecoin or a Kenyan shilling to Naira directly without having to like go through a USD stablecoin. Which obviously adds a lot of cost, and there is some like devaluing of the local currency involved in that. The other thing I'd add is I agree with Simon that it is somewhat inevitable that every currency will have a stable coin attached to it. And I think another reason for that is like governments just, well, most of them won't allow for the complete dollarization of their economy. And you're almost seeing that with how much USD stablecoins are being used in some countries. I mean, there's a lot of reasons why they will do that. They want to still be able to issue debt. They want to be able to set monetary policy. But I think like with the Genius Act, we will see a lot of countries, and we are already. You mentioned the Kenyan bill being passed, which does have a lot of information about stablecoin regulation. I think they're kind of forced to start appreciating stablecoins.
Yeah, that is a trajectory we're on. Hopefully, it continues. Simon, kind of a tough question, but a thought exercise. If Zarp wins and has massive success in South Africa, what could it mean outside of South Africa? If that question makes sense to you.
Yeah, it does. We kind of have the specter of foreign exchange control looming over that question. Um, and again, you don't have to take a position on policy to just acknowledge reality, which is you've got systems now that can't be controlled by regulators, right? And it doesn't matter whether or not that's a good thing. It doesn't matter what your personal opinion on it is. It's just reality. And so I often think back to like the rise of content piracy, again, giving away my age, like when networks like Napster and BitTorrent became prevalent and people were downloading movies and music and content that they didn't have rights to. The solution to that problem wasn't making it illegal, right? Because it was illegal from day one. That didn't stop anybody from doing it. And the powers that be couldn't do anything to regulate it. Like, yeah, they shut down Napster, but good luck shutting down BitTorrent. It's still going today. The way they solved that problem was by acknowledging reality, changing the paradigm, and providing better services. Like Apple realized that convenient beats free. They introduced iTunes. They gave you a better experience than Napster. And yeah, you had to pay for the music and get it legally, but you could get it the way that you wanted it. And so I think the challenge for regulators right now is to acknowledge that reality. Like we can't stop this from happening without shutting down the internet. So we need to think about how we enable compliant solutions that are frictionless, that adopt this new technology, and that align with reality. And so I think that's going to be the challenge, and that's going to present the answer to your question of what activity outside of a country means for the currency in that country. But I think what Seb said is bang on. Like inter-Africa trade gets revolutionized using this technology. If you're able to settle with a supply in another country in their local currency without having to hop through USD, that's a big win for everyone. So I think that's part of the answer to that question. I think currency speculation and FX trading picks up steam and brings all of the market dynamics to bear on local currencies, which are ultimately good for them. And it kind of puts a magnifying glass on local economies. It's like, if everybody in your country is ditching your currency for another currency, then the answer isn't to try and stop them from doing that. The answer is fixing your economy so that they don't want to ditch your local currency, right? So I think this is a net good for all of these countries in time, but getting them to acknowledge that and do the right thing is going to be quite an undertaking.
Yeah, I mean, Apple and Spotify were able to build a better alternative to pirating music. Will governments and large corporations be able to build a better product than than what exists in crypto? That's the big question.
I
Maybe,
did
maybe.
see recently that piracy is back on the rise. I guess because of rising Netflix subscription costs and some of the other changes they've made. But yeah, that is a good parallel.
Yeah. But I mean, let's look at another example, right? Like, let's look at a musician like Iron Maiden. When Pirate Bay got going and people were downloading, Iron Maiden's music there, their reaction was to go, oh, well, all this data is publicly available. So let's pull that data and let's look at where people are pirating our music the most. And then they adjusted their tour schedule based on where people were pirating their music more, and had one of the most successful tours in music history and made an absolute killing out of it. So it's like, you can fight the tide or you can find a way to surf it. And I think that's kind of what we're going to see with this as well, is while everybody else is scratching their heads and kicking and screaming and trying to fight it, there'll be those more kind of mercenary takes where it's like, well, how can we use this to our advantage? and change the way that we do business and evolve and win because of that.
I didn't even know about that. I always heard about Metallica doing sort of the opposite and shutting it all down. But
Yeah, man.
Iron Maiden did the other direction.
Yeah, heavy metal is like the furnace in which the future of music was forged.
Awesome. Well, great deep dive, into South Africa and of course beyond. I think before we kind of wrap up, it would be great to, for clipping purposes, of course, maybe just do a quick overview and let people know how they can participate. Simon, why don't you start with Zarp and just kind of let people know a little bit about it, what they can do to participate today, and then Seb will do Stable after that.
Yeah, great. Thank you. So, I mean, Zarp is a crypto native stablecoin. We think DeFi first. We think that's where the world is moving. You kind of see that happening right now. I've been calling for DEX trading overtaking KEX trading over the last 5 years. And, skip forward to today, Hyperliquid is like a serious take on all of the crypto volume being traded. That movement is happening. So that's where you'll find Zarp first and foremost is in DeFi. On protocols like Stabull. That's kind of what we build for. That's where we live. But we are listed on a bunch of KEXs in South Africa too. We plan to grow that internationally, obviously keeping lockstep with what's possible from a compliance and regulation perspective. If you're in South Africa, the best place to get Zarp is a KEX called AfriDax. They offer one-to-one conversions in and out of Zarp, no fees. And then, there's some tasty programs running. Emissions on Aerodrome are looking pretty good, not to talk up the competition too much. And then even better is what's emerging on Stabull. So if you play the LP game, Zarp is looking like a pretty good token to add into the mix. That's one way to get involved. Otherwise you can just pick us up the way you do any other token, swapping using your favorite DEX aggregator or whatever else. So yeah, it's early days for us. We've got a long way to go. There's still a lot of work to do in the payment space, but that's the best way to get involved right now.
All right, just gonna go readjust my stable lineup here. Thank you for that. And Seb, it's been a little bit since we last had one of these spaces, so yeah, it'd be great maybe if you could give a quick update on what's going on with Stable.
Yeah. First, I'll just add to that. Like in these risk-on periods, you'll often see stablecoin issuance go up as people trade from Bitcoin and Ethereum or altcoins into stablecoins as their kind of cash portfolio or flight to safety. But I think it's kind of definitely time that crypto traders or anyone holding crypto kind of think that maybe their risk off portfolio or their cash portfolio should be made up of more than just USD stablecoins. And it's worth considering having a basket of different foreign local stablecoins. So, yeah, as Simon said, we've got our liquidity incentives program running. So there's some tasty APRs on all our local stablecoins. Zarp is one of them. There's also the Swiss franc and the Brazilian real stablecoin, and a lot of different ones. If you go to app.stable.finance, we're currently running the base pools liquidity program through Merkle, and the other chains, Polygon and Ethereum, will move to Merkle soon. But yeah, aside from that, we've got another liquidity program coming out soon on Liquidity Land, which you'll be able to get bonus incentives to add liquidity, and a few more local stablecoin listings coming up soon.
Awesome. Well, thank you for that, Seb. Appreciate the update there. If you're not using Stable, I definitely recommend it. It gives you very easy, streamlined exposure to stablecoins all over the world. I feel personally confident, not financial advice, but it will be one of the top places you stop every single day on the internet to engage in foreign trading and holding currencies around the world. So please do start learning now. Simon, big thanks to you for joining us, for during this live recorded space, and making time to chat with us during this series. We'll be clipping lots of segments from our discussion and sharing them in the future. But really, wishing you luck with Zarp. Encouraging everyone else to do a bit more research on it. Give Simon a follow as well. And we're looking forward to being back with Stablecoin Spaces very soon.
Thanks, Board. And if I can add just a final thought, I think, to what we were saying earlier about inter-Africa trade and how we just streamline global trade, FX trading, etc. I think a protocol like Stabull becomes kind of a central flywheel to all of that because, on one end of any trade, you're going to have a currency, call it Kenyan shilling, and on the other, you're going to have, a local currency like the South African rand, and being able to go straight from the one to the other is going to become like a central pillar of global trade. So I'm super bullish on Stabull and what the team's building out, and I think they've done a great job.
Yeah, amazing. Appreciate that. And Seb, thank you, of course, as always, for joining on stage, sharing your perspective, sharing what's going on with Stabull.
Thanks a lot, guys. Cheers,
All
Simon.
right. Everyone, thank you so much for listening. Take care. Have a great rest of your week.